You're listening to the Weekly Wrap-Up on Sprott Money News.
Well, greetings once again from Sprott Money News and SprottMoney.com. It's Friday, November the 10th, and this is your Weekly Wrap-Up. I'm your host, Craig Hemke, and joining us this week, sitting in for Eric, is Keith Neumeyer. Many of you know Keith Neumeyer. He is the CEO of First Majestic Silver, which is one of the largest primary silver miners you're going to find. He's also chairman of First Mining Finance. And it is a pleasure to speak with him, and it's great to have him sit in. Thank you very much for joining us, Keith.
Well, Craig, it's always a pleasure, and I'm sure Eric's having a great time in Australia.
Yes, he's down there. I don't even know what time it is where he is, and we thought, well, let's see who we could find to sit in for you. They recommended at Sprott that I track down Keith Neumeyer, and here you are, so thank you so much. And before we get started, just to remind everybody, Sprott Money does have the perfect gifts for your loved ones this holiday season. Our holiday catalog is now available. You can find it online at SprottMoney.com. Eric, see, look at that. I'm already screwing this up. I just gotta have it, I guess, Keith. All right, Keith. Yeah. Here's where I want to talk to you about some silver specific, some commodity specific stuff as we go forward. To begin with, though, silver is up only about 7% year to date versus gold, which is up almost twice as much, something more like 11 or 12%. How do you feel about the performance of silver so far this year, and do you expect better things next year?
Well, it's a great time for people to be buying silver as a Christmas gift. I can tell you that. You know, silver prices, I think, are shockingly low. They've been very stable. You say they're up 7%, but when you look at other commodities like zinc, for example, or lead, copper, even all the base metals, and then some of the battery metals, of course. Nickel, cobalt, lithium, and so on. A lot of these metals have been on an absolute tear, and gold and silver is being left behind. And now we've seen oil start to move just in the last few weeks, and it's just, the precious metals just seem to be, in this very, very tight trading range. And I think they're just getting ready to run, but it is a little bit interesting to watch this current market.
Let's talk about those general commodities for a second. I spoke with a guy you may know yesterday by the name of Mickey Fulp. And Mickey was talking in his long experience that commodities in general run in cycles, kind of long 25-year cycles with kind of 4 to 5 year mini cycles in between. And he's thinking that commodities in general have bottomed out from this latest bear market, maybe that began in 2012. You've been at this a long time too, Keith. Is that how you see it too? Do you think these commodities in general have turned?
Oh, for sure. When you see zinc, going up almost 3 times, and lead doubling, and then copper going up 50%. These are big moves, and it's just telling you what's going on in the world. The miners are producing less metal today than they did 3 or 4 years ago. And obviously, me, being an expert in the silver space, the silver miners are producing substantially less silver today, including First Majestic. We've had 4 or 5 years of difficult price. Our cost per ounce back in 2011, 2012 was in the low $20 range, but with silver, north of 30, north of 40 for a good couple of years, it didn't really matter. We were making all kinds of money, but then when silver broke through $20 back in 2014, it became pretty desperate situation, and we had to really wind back the business and start to focus on preserving capital and cutting our costs. And today our costs are 50% lower than they were back then, but it's really had an effect on production. So we're seeing lower production of all metals on a global scale, including silver, and eventually that's going to affect price. And I think we're starting to see that happen.
Has it been your experience in the past? Kind of a rising tide lifts all boats. Do the precious metals like gold and silver kind of lead the commodity charge? Do they kind of tag along and get dragged higher by the rising commodities? Has it generally worked a certain way in the past?
I don't think there's a direct correlation. I remember, in 2002, 2003, gold definitely took off first, and oil and uranium were quite late. They were about 5 years later. Silver was lagged by 2 to 3 years. When I put First Majestic together, silver was at $5, and it broke through $10 in 2010. So that was 7 years later. So, silver definitely followed gold, but gold was the lead, and it normally is. And that's what's interesting about this current market. I'm not sure if it's, Bitcoin related or cryptocurrency related. There's a lot of money going into that space, and I think that possibly, and we'll never know, but I think gold is being left behind to some degree, because of the cryptos.
Interesting thought too. And I want to ask you, you touched upon this idea of falling supply, falling, ore grades. We're seeing that a lot. We're seeing just general supply get tighter and tighter from the miners. Some think that may lead to some M&A activity in the months ahead, in the years ahead, just simply as the seniors, the large producers, run out of new mines, and about the only thing they can do to get extra production is to buy up juniors. Is that something that you think might be coming over the horizon too?
Well, Eric's pretty familiar with this. Kirkland, taking out Newmarket. For sure. These, M&A is going to happen. Whether it's at current metal prices or whether the boards of directors need to see $1,350 or $1,500 gold, it's going to happen, and that's why I put together, First Mining Finance, of course. But just going to the silver space for a second, if you go back and look at silver production on a global basis in 2015, the miners globally produced 850 million ounces of silver. In 2016, that number was 800 million ounces, a drop of 50 million ounces. We're seeing now some early numbers coming out of Australia, coming out of Mexico, that production's down quite dramatically, it appears. And particularly, of course, Tahoe's offline as well, which is 20 million ounces. It looks like the estimate that's circulating around the industry is that the miners globally produce 750 million ounces of silver in 2017. We won't know the exact number for a few months, but that's a big drop. That's a 100 million ounce drop in production over a 2-year period. And if you're, interested in this silver space, you've got to be pretty concerned about that, because it's, silver is a critical metal when it comes to all the things we want to do as a human race to go green, and all the new battery technologies and electric vehicles and so on and so forth. Silver is a extremely necessary component, and there's a lot of focus on nickel and cobalt and lithium, and people are forgetting about the silver story completely. And I just saw an article this morning. It was one of the first articles I've seen. There was the Silver Institute met last week, and there was a reporter there reporting on some of the supply-demand fundamentals for silver. And they actually had some bullish comments to make in the one of the Bloomberg strings that I read this morning. So, people are maybe waking up to the fact that silver is a lot rarer than people think it is.
Well, let me throw this onto the picture then for my last question for you. We talked a lot about supply and production, but gosh, what about demand? I saw a report this week that said in just the month of September alone, India imported 567 metric tons of silver. That brings their total year-to-date through the 3 quarters of the year to more than 4,000 metric tons, to about 130 million ounces. Based off those numbers you gave us for what might come out of the ground in 2017, heck, India's already imported 20% of it, just year-to-date. What do you make of that, Keith?
Well, those are amazing numbers, and I quite frankly don't know where they're getting it, because that's a lot of buying of a metal that is very thinly traded. If you look at the entire silver market, if the miners are producing 750 million ounces a year, or make it 800, whatever the number is, it's going to be for 2017. You multiply that by $17 an ounce. It's basically a $16 billion market. It's pretty shocking how small the silver market is, and you got a buyer like that coming in. What's going to happen when Sony or Apple or Tesla or Samsung, all of a sudden can't get access to silver and produce their products that they need to produce for the consumers? It's going to be a major problem, and that's when you're going to see the headlines talking about silver. And we could see silver go up 200-300% quite easily, as we've seen zinc and all these other metals move in the last year.
There's an interesting idea. I hadn't thought about that one before. You think back like to the robber baron days 100 years ago or 150 years ago, where the oil company would buy the rail line and everything else that goes with it, right? maybe Apple or some other. Can we talk about larger metal producers buying juniors? I wonder if maybe we'll get to the point where Apple or Tesla or somebody like that will actually just go buy their own silver. Just buy the mine themselves.
Well, we've seen Tesla buy lithium, and we've been approached directly by an electronics manufacturer out of Asia, and we've also been approached directly from a very, very large jewelry manufacturer. So, it could be happening because, these end buyers, you'll see that there's risk to their supply.
There you go. That's I'd not thought of that before, but that's not surprising. I don't, but that kind of just dawned on me this morning, and I think that's certainly something interesting to consider as we go forward. Keith, hey, again, thank you so much for subbing in today. Very valuable information, and we might have to use you again sometime soon. That globe-traveling Eric, you never know where he's going to be.
Well, he's definitely having a lot of fun in his retirement. He's supposed to be relaxing, but I think he's working harder now than he probably ever has in his life. So, anyway, good for him.
Yeah, that's what he would say too, no doubt about it. Well, thank you very much, Keith.
Well, it's always a pleasure, Craig. Appreciate the opportunity.
And from all of us here at Sprott Money News and SprottMoney.com, thank you for listening. Be sure to check out the SprottMoney.com website on your way out. You'll notice that we now carry Scottsdale Mint products for folks here in the USA. You can order them right on our site, so please check us out again at SprottMoney.com. Thanks for listening. Have a great weekend.